All right, guys, back to work. Weekend is finally over. I think we're the only people, us traders, on the planet that actually look forward to Monday morning, right? And boy, do we have a lot to look forward to in this week ahead of us here. It is Monday evening. We have a ton of things to talk about here tonight. We got peak week for earnings, huge corporate earnings this week. We got, of course, Fed week, FOMC on Wednesday this week. Last full week of the month of July. There are a ton of great trades on my radar for tomorrow, and I want to make sure you guys know where those are. I'm going to cover all my favorite earnings trades and FOMC trades, end of the month trades. I'm going to cover all my favorite trades in the video here tonight. That way you guys have a game plan to make some money on Tuesday. Before we jump in though and get the party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy these videos, do me a favor, hit that thumbs up button, give me a like here in the video, and give me a shout out in the comment section below. We'd love to hear from you guys. Thank you so much for tuning in, supporting the channel. But enough of the intro, Joe. Let's get ready for Tuesday. Tuesday should be another great session tomorrow in our trade room. Now, let's start first with our 60-minute time frames here on the Emini and the SPY, the Nasdaq, and the QQQs. Now, what I do is I like to use the 60-minute chart to help me plan my trades. And then later on in the video, I'm going to drill down to a much faster tick chart to talk about how to structure the best entry signals. All right, so we'll go over the bigger picture to plan our trades on the 60-minute. And then later on in the video, I will give you every reason to stick around tonight. We'll talk about the entry setups, how to capitalize on that plan for tomorrow. So where are the best trades setting up here for tomorrow? Well, boy, I mean, you'll notice right away, the E-mini and the Nasdaq are almost polar opposites right now. Interesting charts, though. The S&P is overall bullish. Anytime we see a strong move like this in one direction, we're expecting these buyers are trying to retest that high. Now, this would normally be a pretty easy job just to get long right now. But here's the problem. I've got range below me. Those ranges act like magnets, and therefore, I think there could be some really nice bull traps off the high for some shorts for the bears here. I really would love to get some bear traps down below that trading range. I think these ranges really give the experienced traders the bear traps below the low, the bull traps above the high. I think the S&P right now smells like traps, and we'll talk about how to make some money on those traps here as we go deeper into the video tonight. The Nasdaq is an interesting one, right? Nasdaq is overall bullish, right? Let's not forget that big run up that we saw at the beginning of this month. So we're definitely overall bullish. But boy, look at how strong that reversal was off the high here. That is a lot of momentum going lower right now in the Nasdaq. And you'll know, remember, we have big earnings. We've got Alphabet, Google, we've got Microsoft, we've got Meta. We still got a bunch of tech earnings coming out this week. So this is a very interesting chart because right now, much like on the S&P, we got a range brewing. Ranges, you know me, I love ranges. Very bearish. I would imagine, if I could guess right now, I would guess the best buying opportunities right now would be a bear trap down below that trading range off a ton of support in an overall bull market. That is where I would love to get some bear traps for tomorrow. I also think too that above some of these highs, until we get the earnings reports out of the way here this week, I would imagine lots of bull traps, try to use this range as a magnet. One of these moves will likely rip and go all the way back up to retest the high, but it does seem a bit unrealistic until we get some of these big numbers out of the way later on this week. So the key word for tomorrow is traps, right? Traps, baby. I guess those are two words, right? But traps are really where I think the best trades are setting up for tomorrow. Now, we're going to go over a lot more detail than just that here, so don't you worry. Before we go into the tick charts, though, before we drill down and talk about specific entry patterns here for tomorrow, let's take a quick check on the econ calendar, there are two things that I would be aware of if I were you for tomorrow. Now, we've got the FOMC later on this week. I'm not going to talk about that until tomorrow night. So tomorrow night we'll worry about that's tomorrow night's problem, right? We'll worry about the FOMC stuff later on in the week. For tomorrow, though, there are two things that you want to keep in mind. One, of course, is the consumer confidence number at 10 o'clock Eastern time. If you are a student of mine, if you're with me in the trade room, or if you've taken my free trading classes before, you probably know that anytime I see a 10 o'clock major news event, you always want to pay attention. Usually that means the best trades will be somewhere around that 10 o'clock to 11 o'clock hour tomorrow. So consumer confidence number, 10 o'clock Eastern time. If I could only trade for an hour tomorrow, it would be that 10 o'clock to 11 o'clock. We will obviously be there all morning tomorrow in our trade room, but that's definitely something I would keep on your radar. The second thing to keep on your radar is the earnings reports this week. This is known as what's called peak week of earnings season. And what I mean by that is you'll notice that earnings season has basically a 3-week process, right? That was last week. This is this week. And by the end of the week this week, we will have heard from 3/4 of all the biggest market cap companies in the world. So they call it peak week. Last week was a bit of an appetizer. This week has a ton of corporate earnings. Next week is no slouch, but really the only big number next week is that Apple earnings to finish off earnings season. So, long story short, be aware we are going to have a peppering of earnings here this week. Now, I want to keep this simple. We do not need to go into detail about what if Microsoft beats or what if Meta misses. That is irrelevant unless you are trading individual stocks. What my goal is during these big earnings weeks is be careful around the open and the close, right? So basically trade the middle of the session, the US morning session. Just be careful around the edges of the day, around the open and around the close, because that's where the most volatility, the most unpredictable price action will be. And the big thing is, kind of one of the hardest parts about our job tonight is we're going to plan our trades, we're going to prep our charts, but you have to be aware with such big earnings reports coming out tomorrow and Wednesday and Thursday, there's going to be a bunch of potential catalysts that could have us making adjustments tomorrow in our trade room. So the best place to be tomorrow is with us in our trade room, because we'll do our best tonight. But again, with all these major earnings coming out this week, there's a lot of potential grenades that can go off. And so I'm sure this week we'll be making some on-the-fly changes, on-the-fly decisions tomorrow morning in the trade room. But please, the two things I want you to be aware of is, first of all, be careful around the open and the close. And the big thing is don't overthink this. Do not overthink this. We are not trading the actual earnings. We are trading the reaction to those earnings. I don't care about what these actual numbers come out tomorrow, right? And the rest of the week, right? I don't care. Okay, you're more than welcome to go into the weeds on this stuff. But if you want my opinion, you don't need to know what the actual numbers came out as. All you have to know is what's on the chart right in front of you. Now, back to our charts, because the money, as we always say, the money is made on the charts. It's good to know when the news is so you can avoid the whipsaw, but we will be trading the reaction tomorrow morning in our trade room, and it will probably be a pretty active week here this week with some of the big earnings reports that are coming out tomorrow and the rest of the week. Now, let's go over my favorite trades now, setting up. We'll go S&P first, S&P and SPY, and we'll wrap things up tonight on the Nasdaq and the QQQs. I mentioned earlier on the 60-minute chart, we're very bullish overall. We anticipate a pullback and a retest of this high, but unfortunately, I'm concerned about these ranges, right? And how ranges act like magnets, and so it's very difficult to want to buy up here, right? As we go higher, it's very difficult to want to buy up there because there's very little space up overhead. And as I had mentioned before, I think there probably are great opportunities. I'll tell you, my favorite trade would be a bear trap below that low. Again, because we are so bullish and because that range acts like a magnet. My concern, of course, though, is if we do end up going higher here, until we we can see a breakout that holds, until we can see a good convincing break through that 46.10 highs, I think there's a lot of potential here for bull traps right above that high and some shorts back down again. So how do we structure that, right? How do we make money off of that idea? Let's go now over to our tick charts. We trade off of tick charts in our trade room because everything is easier with tick charts. You'll notice this is a 7,000 tick chart. You can see time frames in the upper left-hand corner, and that, of course, is the 21 EMA. It's an EMA. A lot of folks ask that. So if you're watching for the first time, that is what you are looking at here right now. Now, we saw the 60-minute. Now, what's the most important factor here, or factors on the tick chart? There are probably three important factors right now on the S&P and the SPY tick chart. First of all, we're pretty bullish, right? You can definitely see this is not a bear market right now, right? We got higher highs, we've got higher lows, so momentum is pretty bullish, right? Okay, that's one key factor on the chart right now. The next key factor is we have this trading range, right? Now, ranges act like magnets, right? Ranges love to rotate back and forth. They act like magnets. We go up, back into the range, go down, back into the range, up, back into the range, right? That range, you guys are learning this, right? Inside of our free trading classes, right? Love ranges. So we're bullish, and they get a range right now. And then remember, right overhead, there's all that 60-minute resistance. And like I said earlier, right, I would imagine buyers would love to be a buyer here and go up into that high. I just don't know how to structure a good entry up here, right? Finding a low risk, high reward. Remember, that's the key to making money. The key is you want to filter your trades to, what do we always say in our trade room? How can I risk small to earn large? Right? How can I risk small to earn large? And it's very difficult to find a low risk, high reward trade in that area. So if we end up going higher here tomorrow, I would love to get that short off the high. The only problem we have is we have a lot of bullish momentum, right? So as the market goes higher, this is where you're going to want to look for. So in my free trading class, I talk about what's called a failure into a pullback combination, right? In the free classes, you guys are learning about failure into pullback combo. This is exactly where a failure into pullback combo would really be perfect up in this area. So imagine now we make that run going higher overhead. I do not want to buy into that big high on the 60-minute, but let's say there's some rookie traders, some inexperienced traders, some gamblers out there, right, who aren't watching my videos. They're getting in the weeds, they're overthinking things, and they start going up and they start buying into that high. Okay, this reminds me of one of my first coaches would always tell me the easiest money you can make in a range-bound environment is to wait for a breakout, get up into an area of resistance, and then let the breakout pullback buyers try a couple times and literally use their stops as fuel to run back down again. Okay, so again, you guys are learning these failure patterns, right, in our free trading course, which reminds me, I'll be talking a lot about these failure patterns in the video tonight. You guys should definitely learn them. If you're not making consistent money right now, you're going to want to learn these setups. What I'll do is I'll put a little pop-up there for you with our free trading class. Grab that link that popped up there. Take that free course, because the strategy that you'll learn in that short video series will teach you a simple trick we use every morning in our trade room to know exactly where the best winning trades are going to be that day. And also, too, as part of that video series, you'll learn my 4 favorite entry patterns, like failures, like pullback combos, to help you start making money on your own account. If you're sick and tired of missing the best moves each day, you definitely want to grab that link, take that free class. There are a ton of examples of those failure into pullback combos. I will also also put all the important links you guys need down in the description of the video here tonight. So if you don't get the pop-up, hit me up in the description. It'll be there as well. So long story short, I want to go up into this area. I want to trap these buyers in, right? Let them try a couple times. Why a couple times? Because again, we're overall bullish, right? We're not a bear market right now, right? We're bullish overall, so I need to trap those buyers in to use their stops as fuel to turn this thing around. Now, watch closely on this. If we end up rolling higher like this, and these buyers get caught chasing it once, twice, and we successfully sell, right, going back down again. Now, think about where the market wants to go now. Where does it want to go? It's going to want to go back into this trading range. But remember, ranges love to rotate. So the amount that we go above the range oftentimes will swing all the way back, roughly equal on the amount on the other side. We call this a pendulum swing, right? Oftentimes we see the amount we go below can be used as amount of resistance up above. So the bottom line is, if we can get that failure off the high, don't just get lazy and let the trade drop. Now begin to go out and look for entries to add on. What I always do in these situations is I look left and I try to find a trend line off the lows like that, okay? Then what I'll do is I'll take that trend line, copy it, and I'll bring it up overhead. And then these are simple, right? We look left, we find some prior swings, right? Prior swing, prior swing. I want to get the first short, or the first test as we call it, off the top of this channel. Now, I'm keeping it simple right now. This would be kind of a bull trap example, right? Above a prior swing. You guys will learn about traps, setups, and all the entry setups in that free trading course. But this could be any of the entry patterns. Really, it could be a bull trap. It could be a buyer failure. It could be a pullback combination. But this is kind of what I'm talking about, where I see a failure into that pullback. Right? We go up, buyers try a couple times, they fail, and then as they roll lower, we now look for that first pullback and whack it, right? It's that failure up around the highs, and then that first pullback, that failure into pullback combination. And again, I say pullback, but it could be any of the entry patterns you guys are learning here, right? Off that high. Now, I'm sure there's a lot of questions out there right now. So how would I buy up here? Right? What would it be like to be a buyer up here? The only way to buy this thing safely will be to wait for it to pop up, wait for it to pull back, and they'd have to hold and just rip, right? Just rip right through those highs here. Which, is it possible tomorrow? Absolutely it is. We have huge earnings reports coming out that the rest of the week here this week. So if they can go up, hold the pullback and blast, that will be an adjustment we'll have to make tomorrow morning on the fly in our trade room. But until we see that kind of breakout that holds, I'm looking for shorts back down into that trading range. Now, I mentioned a moment ago on the 60-minute chart here right now that kind of think about this one big trading range. This could easily run and roll all the way back down, and I do think there'll be more buyers waiting down here because, again, we're an overall bull market, right? So, okay, how do we buy down here? Right? Oh, and also, too, could I short this thing going lower? Let's talk about that, and then we'll go take a look at the Nasdaq here. I appreciate you guys sticking around tonight with this video. Now, if we do end up rolling over, okay, the key going lower. Well, here's the question: what's the problem? Right? What's the problem? There's always a problem. Okay, it's very difficult to think of a situation where there's no problem, right? There's always something we have to kind of work around, right? You know, for example, we're going higher here. To short that high, what's our problem? Our problem is momentum. It's a great place to short, but the problem is momentum, right? If we go lower, what's the problem now? It's not momentum. Right? This becomes very bearish now as you roll over. Momentum is not the problem if we go lower. What's the problem? The problem is we're bullish overall with a range here. So as we go lower, our problem is location, right? We are now trying to sell relatively low down here. Now, how do you avoid that? There's one pattern that we always talk about in our trade room, and you guys learned this in the free video class, right? It's traps, right? Traps are easily going to be your best bet. If we simply go up and then back down, or we roll over going lower, the key will be is to make sure we're selling as high as we can. Because again, we're an overall bull market. So as we go into some of these support levels down here, we have to expect buyers waiting and trying to go back up into that trading range. All right. Now, think about how this pattern looks. It's a lower low in price and a trap high above that high. Okay. As we go lower, we see a series of lower lows, and those lower lows are what make that bull trap possible. Okay, so if we do, and again, this could be up and rolling over, right? It could be rolling over. It doesn't matter. As we try to rotate going lower, my favorite trade for tomorrow going lower is that bear trap. Or sorry, it's a bull trap, excuse me, right? It's a trap of the high, right? It's a bull trap. Okay, now, how do we buy it down here? I love the idea of buying down here because, again, we're an overall bull market, bunch of ranges right here acting as magnets. Now, you tell me, if we wind up all the way down at these lows, what's our problem, right? There's no perfect setups. There's no free lunch, okay? There's always going to be a trade-off between momentum and location. Okay, there will always be a trade-off between momentum and location. It's almost like a balancing act, right? When I have good momentum, my location stinks, right? When I have bad momentum, I have a great location, right? It's always that balance, okay? There's no free lunch. And if you think there's a free lunch, watch out because you're probably missing something. So if we're going lower here right now, great place to be a buyer, right? Fantastic place to be a buyer. Lots of support, range above us, overall bull market. But what's the problem? The problem is momentum, right? This will be a hell of a lot of bears in the market. And if it rolls over, those bears are probably going to put up a fight because the Nasdaq is so bearish. The Nasdaq is a big variable right now. I talked about this last week. Oftentimes, when one market, like the Nasdaq, is very bearish like this, it can really lead to some aggressive moves, in this case lower on the S&P. Now, you guys know the answer to this, right? There are really two basic scenarios to buy the sucker. If we end up rolling over here right now, we want to be a buyer, but we have to what? Respect the sellers. So just like trying to short off the highs, we want to trap these traders in, right? Let them dig their own grave, if you will. Think about where their pain is and buy right into their pain. This is what my first mentor would always tell me. Look for an area where everyone's a buyer, right? Look for a scenario where everyone's a buyer. Do you see why everyone's a buyer down there? Why? Because if you short off the high, what are you doing? You're taking profit down there. You're buying your way out, right? Buyers are buying down here because it's support below a range in a bull market. And if the bears get trapped and they get stopped out and this thing squeezes, what are they doing? They're a buyer as well. There are three types of people who will likely be buying in this area tomorrow, right? People who short off the high, taking profit. Buyers are buying because that's what buyers do. They buy low. And sellers are buying because they're getting squeezed. And the only way out of a short position is to buy their way out. So a two-try failure off of that low. Now, a lot of times what happens is you get something like this. It'll roll lower. There'll be so much momentum there for the bears. When they pull back, they don't try once, try twice, and fail. No, they pull back and they actually retest that low. Remember, anytime we see a strong move in one direction, we expect a retest of that level, right? Now, what happens then? Well, at that point, now think about it. Not only are the sellers who sold here now taking profit, now we can go in and rope in some of these rookies. Bears try once, bears try twice, rope those bears in, and again, use their stops as, right, use their pain as fuel to run higher. That again will be your failure. And then as we go higher, remember, don't just sit there and brag about the money you're making on that reversal. Go out and get to work, mark off that high, bring it down to that low. You know, we always talk about the easiest way to make more money is the easiest way to make a lot of money is to learn how to make more on your best trades. This is a great example of that, right? While a lot of people will grab that low and celebrate as they watch it going back into that trading range. An experienced trader knows, okay, this trade is working for me right now. Let's keep adding to it. Let's keep finding ways to keep adding to this because we know where the market wants to go. If I can get better at building on my best trades, you've already done the hard work of finding a good entry, right? Why not build on it and make it even more profitable for you? So I like that as well. Now again, this is kind of that simple way of looking at it as a failure into a pullback, right? It fails and then pops up and pullbacks off the low of that channel. It could be a trap setup, a pullback setup, a failure setup right around the moving average. You guys will see a lot of examples of those in the free trading course. All right, so now we get a pretty good plan of attack here now as we go higher and as we go lower. The one thing right now is stay out of the middle. Right, avoid the middle, wait for the breakout, trap the buyers in, wait for the breakdown, trap the bears in, and back up into that trading range. And again, I'm sure the market will throw some curveball at me for tomorrow, but that's of course what we have our trade room tomorrow morning at 8 o'clock Eastern time. Let's keep going because the Nasdaq, I'll tell you right now, the Nasdaq has potential to be a very, very good trading market as soon as we start getting over some of these big earnings we have later on in the week. Like I mentioned in the introduction, the Nasdaq is still very much a bull market overall, but that's about all that's bullish, right? This move down is very, very strong here. And so at some point, we can easily expect at some point this Nasdaq will likely make a rip right back up again. At some point, we'll probably see another one of these face rippers, right, that just rips and runs right back to retest the high, because anytime we see a strong move like this, we expect a pullback and a retest. Right? So that's on my radar. But again, is it going to be this week or next week? I couldn't tell you. Right? I couldn't tell you. Usually what happens in these situations. Now, again, big earnings week this week. It's very difficult to speculate too far ahead of each earnings report right now. But in my experience, and I mentioned this briefly in the introduction, whenever I have an overall bull market, but I'm very bearish into a trading range here, this is an easy one. The best trades will usually be on the bear trap below that low. Now, again, this could be tomorrow. It could be Thursday. It could be next Tuesday. I don't know. But just looking at it right now, that would be something I'll be very, very interested in, again, whenever we get it. And a lot of times what happens is because these ranges love to rotate, when you get that bear trap, all the sellers get squeezed. The market sprints going higher. And because we've got this overall bullish market overall, a lot of times the bears come in and they can't stop it. Right? And it rips and rips and rips, and it kind of squeezes and runs higher. It's all because of that fake out breakout off the low. So that would be kind of the dream scenario. Nasdaq, if there's a trading god up there for the Nasdaq watching down right now, I'll have that, please. Later this week. My big concern, of course, here's my big concern, and we talked about this morning in the trade room, is that you've got to be very careful as this thing goes higher. Right? Because ranges act like magnets, and you can easily see, there could be so many channels here coming down. This is a very easy way to get in trouble being a buyer here too aggressively. It wouldn't surprise me at all if we saw some beautiful bull traps above those highs. And again, eventually one of them will go, but we'll have to kind of wait and see which one starts to separate off the moving average and which one kind of gives us some good momentum going higher here. Okay, that was a very long-winded intro to the Nasdaq, but now look at the tick chart. Okay, this is a pretty straightforward one. There is really one key component right now on the Nasdaq. It is curled up in the fetal position ahead of those big earnings reports later on. Really tomorrow afternoon for the most part here. And really, whenever we see a trading range, what do we think? Ranges act like magnets. Okay, what do? We find levels of support below. We find levels of resistance up above. And what I said earlier, right? We wait for a breakout. We go back into the range. Wait for a breakout, we go back in the range, okay? Now, the one variable about this is if with earnings coming out here, eventually one of these breakouts will probably keep on going, right? Because again, we are all bullish overall, right? But knowing which one will be the one that breaks out is very difficult to tell. So until that happens, right, we'll assume all breakouts are going to fail right now. Now, my favorite one, of course, right, is the one going lower here. Okay. Now, remember, what's the problem? Okay. What is the problem? If we go lower, what's the problem? Is it location or is it momentum? You tell me. Right? You tell me, right? We're not very bullish overall right now on this tick chart, right? So as we go lower, location is great, right? It's great. In fact, there's a lot of support levels I have down below us. 15,410 comes to mind right below us here. So momentum is the problem. As we go lower, how do you buy into a bearish market like this? You wait for this. Now, keep in mind, right? 5,000 tick chart. I'm going to drill down tomorrow morning and use a 1,000 tick chart. For example, today, very good example of a small little 2 try on a 1,000 tick chart. That same idea, though, applies over here. So break down, trap those bears in, right? Let them try a couple times because, again, we are pretty bearish here in the short term. And once they're locked in, once they dig their own grave, now we can buy into stops and look for that squeeze going higher here. Also, number 2 is sometimes these things will really be strong. Sometimes they'll pull back and they'll retest that low. Mission accomplished. If they retest the low, really it's even better, right? Because whenever we see the strong move like that and they retest, we go, okay, now we know all the pullback bears, they've now spent all their bullets. They've all spent all their ammunition. And now in come the rookies. And they're not watching my videos. They're chasing these things going lower. Horrible place to be selling. Great place to be a buyer. We're just going to make sure we get that punch right off of that 2 try failure, off of that low. Lots of examples of these inside that free trading course I mentioned earlier. And then again, remember, the easiest way to make more money, don't trade more markets, don't trade more setups, get better at adding, get better at going bigger on your best moves. We know where this thing wants to go now, right? It wants to go back up into that trading range. It wants to rotate all the way to the other side of that trading range. So don't just kick your feet up on the desk, right? Go out and look for that add-on. These are one of my favorite trades right here, right? They kind of add on because, you may not have the signal. You may not have the guts to take that reversal off the low, but everyone sees this thing turn over. Everyone sees that pullback, and that will generally be a much easier trade for newer traders to stomach and to identify as well. So traps, failures, anything off the low of this. What I will usually do in these cases is put a half off target at the other side of that trading range and leave a piece to be a runner, right? If we can get that run going higher there. I like that a lot. And again, that could be really anywhere in this area down below. As we go higher, right? As we go higher right now, literally the same exact game plan, right? Same exact game plan as we talked about on the S&P. Trap those buyers in, let them try a couple times, use their stops, get below that moving average, get it on coming over, right? And we're looking for that first pullback, that failure into pullback combination. Again, I look for that channel off that low, off that high, and try to put that together off that high right there. Obviously, I'm simply drawing on the screen right now. I have a lot of examples of these off charts, candlestick charts in that free trading course. But this is the game plan in which we're looking for here for tomorrow as we go higher here. Now, again, eventually one of these will break out and keep going. Like I mentioned before on the S&P, we're going to have to see a breakout. They're going to have to pull back to that moving average and show us they can pull back and jump, right? They have to get a very convincing, what I call a 1, 2, 3 breakout, 1, 2, 3. They really have to get a very convincing breakout going higher for us to then start taking these buyers seriously up above these highs. So that will definitely be one small adjustment we may make here for tomorrow. But until they get that pop, pull back and go, until they get that breakout, we're going up. We'll basically look to trade against those breakouts, go back into that trading range until something changes, right? And again, that something may be the news catalyst that we have here for tomorrow. All right, guys, so our biggest challenge this week is being open-minded, right? Because we're doing a good job at prepping up our chart tonight. With big news this week, the Fed later on this week, there'll be a lot of on-the-go adjustments tomorrow in our trade room, which really is the exact reason we have our trade room, because we can prep things tonight, but the market's always love to throw us a curveball. We get the opening bell here for tomorrow. But now you know the basic game plan for tomorrow that I'll be looking for tomorrow morning in our trade room. Now, speaking of trade room, I'll put all the important links here for you guys. Not sure what's going on there on the video player there, but nonetheless though, I'll put all the free class links. I'll put all the members trade room links. I'll put all the important stuff that you guys need down in the description of this video here tonight. So definitely grab those links. I would certainly recommend take the free trading classes first. Get your feet wet, get the charts going, get momentum at your back, and that way you'll be ready to go with us sometime soon here in the morning trade room. If you have any questions, any trouble, there's a phone number on this. I'll be more than happy to answer the call. So don't be afraid to call the office or use live chat. We're always here to help out every step of the process. So don't be afraid to reach out and call us if you have any questions, especially if you have any trouble getting into our free trading classes along the way. All right, guys, hope you learned a lot from this video. Tomorrow, keep an eye out for those traps. Don't be a victim of those traps tomorrow, and hopefully I'll see you tomorrow morning in the trade room. If not, we'll come back tomorrow night, and we'll do it again tomorrow night. Get ready for a big FOMC Wednesday. It's going to be a busy week here this week. That's all right. We are ready for it. Now, get some rest. I will see you tomorrow morning. If not, same time, same place tomorrow night. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.